So business owners and real estate investors, have you ever applied for a commercial mortgage or a business loan and you ever felt like you had everything lined up for a loan and only the underwriter just asked for that one more thing or whatever, hey, they haven't really truly made a commitment to you, and what is really going on? And what I wanted to do is I wanted to share three recent stories that I've been seeing in the marketplace and three solutions that I would see to address some of the concerns that's going on. And what I'm working on right now is a group, and they're refinancing their commercial building. They've owned it just when we started working together, just less than a year, but now they've owned it for a year old. The loan amount is right at under $2 million, and they're making a cash out. So they're trying to get additional cash to use for working capital, and they're doing it with limited documentation, so only an appraisal and a rent roll. That's it. So that's all that they're using to apply and get this loan. The other two borrowers are both for getting SBA loans. One one SBA loan is for an acquisition of purchasing a business, right? The business that they're purchasing has limited collateral, so it's no collateral. It's just they're just buying cash flow. I mean, I guess there's a few pieces of equipment, but it's a janitorial company, so not much collateral associated with that business right there. And then another borrower is buying into a fairly new franchise concept, and this is in essence a startup, and they need money to do build out for the place, the location that they're going to be operating from, because going to be housing classes and that kind of stuff that are going to be there. So they need to make it look really nice because people are going to be coming there on that location. So what the first one right now, commercial real estate, like a commercial building, is a challenging asset right now. So with limited documentation and so forth, it can be very challenging. So, you just got to be, patient, and just be willing to ask for, basically the underwriter is basically going to say, even though we've sent out a proposal, until you provided all the documentation that we request, and sometimes they'll look at information and they'll have a question about it and they want supporting documentation for that. So a lot of times, you just got to be patient and provide that additional documentation that they have. Mainly it has to do with the who owns the property and the history of who owned the property and so forth, or who's in the entity that's financing the entity. The one that's starting brand new franchise concept, mainly I'm trying to make sure that before we submit to the underwriter that we have all our ducks in a row. So meaning that the business plan and financial projections are really tight. And so, I can tell they're getting a little frustrated because I'm like, hey, we need to correct this, to make sure, because you only have one impression. So we got the underwriter of the lender to be able to saying that they're interested, based on like basic information like tax returns, financial, personal financial statement, that kind of stuff. But before put the stamp on it, they got to provide financial projections and all this stuff. So I'm asking to make sure that this is tight, right? And then the other deal, with the acquisition, because there's not a whole lot of collateral involved and that kind of stuff, they're before it goes to the underwriter, they made a basic term sheet with the terms and some of the things that they want to see. We only had two meetings with the underwriter, so well, one with the loan officer, just a kind of introductory, ask some basic questions, and then based on that submittal, then they made an offer, and then once the offer is made, and you've made a commitment to the offer, then it goes to the underwriter for a decision. So one of the questions, why all these layers of steps? And here's three suggestions on this process, right? So the number one is you got to be committed. You got to make a commitment to the underwriter and the lender. Because look at it like this. If for it was just equated to dating, right? If you don't make a commitment to the other person, they're not going to make a commitment to you. So you got to be committed. You got to make a commitment to the process because you can't just be shopping around. I see a lot of borrowers that just want to shop around. And if you do that, if you're known as a shopper, you're the likelihood of and I'll just say this, the scope of the players in the lending game is a lot of times really small. A lot of times we talk to each other. So if you're doing all that shopping, you're going to make it really harder to you be lend to. So number one, make a commitment. Show that you're committed to the process. Number two, just make sure you have all your ducks in a row, you know, meaning that if they ask for documentation, provide it quickly. If even if they ask for something that you feel that you've already submitted, just submit it again, you know. Uh that so that's number two. And then number three, which will help number one and number two, is just be patient because with the ebb and flows of the market, you know, the underwriting criteria can change a lot, especially in the commercial building situation. Not too long ago, I mean, I know a lot of lenders that have just said we're just not funding that type of asset in right now. And so you just got to be patient a lot of times in that process. All right, so again, just show commitment, have your ducks in a row, and then be patient. All right. Hey, definitely follow us for more information.